right, welcome everyone to the 2018 Silver and Gold Summit. As most of you know, I'm David Morgan, founder of the Morgan Report. So I'm just going to introduce the companies here, and I guess I'll go in order with First Majestic. First Majestic's has been one of the primary silver producers for over a decade, and this can be seen through it having one of the highest betas to the silver price in the industry. The company was able to take advantage of depressed silver prices back in 2015 with the acquisition of Silvercrest and its Santa Elena silver and gold mine. More recently, acquisitions of Primero for its world-class gold and silver deposit in San Dimas. The company managed to restructure the existing silver stream agreement and enter into a less encumbering precious metal stream. Optimizing San Dimas will be the focus of the company over the next few years and may be one of the main drivers to increase cash flow. MAG Silver, MAG and Fresnillo. I'm going from left to right, by the way. Dr. McGaugh, Peter McGaugh, and this was Keith Newmeyer. I think all you know that, but let me just do the best job I can moderating here. And so MAG and Fresnillo, developer and operator, is a JV partnership and currently constructing the high-quality silver development, one of the highest quality silver development projects in the world in Juanicipio, set to commence production in mid-2020. Once in production, it will be the lowest cost primary silver mine of scale with projected all-in sustaining costs of $5 the ounce. Hecla Mining is a diversified, low-cost precious metals company and the oldest NYSE traded precious metals company, which is currently the largest U.S.-based silver company with 2 large silver mines in the U.S. and a smaller operation in Mexico. It has 3 producing gold mines in Canada, Casa Bernarde in Nevada, Fire Creek and Midas, as well as another gold mine in Nevada currently in transition and undergoing optimization, and that mine is Hollister. Hecla's future looks good. It has only recently acquired its Nevada operations that will undergo optimization measures over the next few years. One of these includes one of the highest grade gold mines in the world, which is Fire Creek. And finally, SSR Mining. The company has been well-managed, consistent precious metals producer over the last few years with a deep project pipeline and near-term organic growth projects. These can be funded internally, given SSR's growing cash flow generation combined with nearly $500 million in cash and equivalents. It has a diverse asset base with operations in Canada, Nevada, Argentina, and development projects in Peru and Mexico. SSR has one of the highest betas to the gold price amongst its peer group. Near-term production growth will be driven by step-by-step and as its throughput at its low-cost CB mine and its Puna project. Over the medium term, the largest asset, Marigold, will see growth increase up to 100,000 ounces annually by 2021 to 2022. So there's an introduction for everyone, and I have some prepared questions, and we have a half hour, so unless I get the axe from the back to cut it short, we'll, if we have time, take questions from the audience. So I'll go this direction. SSR Mining, what is your strategy to add value for shareholders, and have you been executing on that strategy?
Well, thanks, and good morning to everyone. Yeah, you know, look, we've had a long history here related to silver and silver growth, and so even including over the course of the next year, we've got growing margins, we've got production expansion across the portfolio. So I think there's not a lot of risk when it comes to the absolute greenfield type risk that you tend to see that's created problems for some of the equity holders over the last several years. A balance sheet and I think an execution track record over the last several years that's also been probably second to none.
What sets you apart from your peers?
Certainly in this environment, it would be probably the $500 million in cash that we've generated from the operations. You know, I know that some people certainly identify as having, let's say, lower cost operations, but we've managed to put a lot of that cash on the balance sheet through a combination of operating cash flows and asset sales. I think it's the expanding margins in the business going forward, and you're already starting to see that, and we put out in early November, we'll put out our quarterly statement, so you'll see that. And it's the execution, the track record of delivery, right? That consistently we've delivered on what we promised.
Describe your growth profile.
So this year we'll produce a little over, call it in the neighborhood of 325,000 gold equivalent ounces. That's coming from 3 operations, going to a little over nearly 450,000 ounces in 2 to 3 years as we get into 2021. And again, that's no major step change out of one particular asset, with the exception of the silver property that we have down in Argentina, where that's ramping up through new construction this year. So a lot of silver exposure, silver growth, as well as then moderate gold growth over the next 2 or 3 years.
And the last and final wrap-up round is...
Wow. I don't want to leave. I mean, this is so early. Come on.
The importance of jurisdiction in mining.
Jurisdiction. I mean, I think a lot of that, and hopefully we'll get a chance to debate a little bit about that. But, everyone has their ability to manage different risks across their own portfolio. I think it comes down to your history in that particular jurisdiction, what you feel comfortable with, the community, the importance of how you've managed the community and the people. If you take good care of your employees and the government officials that are around you, they tend to have been supportive. There are a lot of external forces today that can be influential, but that then again comes back to what's the individual investor's appetite for that. And I think it's really digging into the details and understanding how that individual project and/or company can execute in that jurisdiction, and then identifying whether or not you're comfortable with how they're going to execute.
Very good, thank you.
You're welcome. Thank you, David.
All right, Mike, it's your turn to get beat up. So last year you had a lot to say about the innovations that was taking place at Hecla. So that's my first question. How is innovation changing the mining industry and generating value?
I think, thank you for that question, and good morning, everybody, and welcome to the summit. Innovation is coming in mining. It is changing the industry. If you're talking to a mining company that is not innovating, you have to ask why. The objective of innovation is to make mines more efficient, to pull the men away from the face, to move them up to the surface, to reduce the inefficiency in a mine during shift change when the mine sits idle and the men travel up to the surface and come all the way back down. And if you can operate the mine 24 hours a day, you're just by definition becoming more efficient. From a safety point of view, if you can move men away from the face, if you can move men away from having their hand on the steel, so you can move someone to an operator's room where they're keeping track of 2 or 3 machines while they do something else. It's a way of managing your cost structure. Obviously, it's safer. You can manage your cost structure because in mining, the costs rise every year with labor. It becomes more expensive to have people. The benefits are higher. The taxes are, well, in this case, the taxes have dropped. But your cost of operating typically rise each year. And by bringing in innovation and by saving the number of workers, you can actually sort of cap those costs. We're seeing that in Quebec, where we bought 2 autonomous trucks. They're 40-ton trucks. They go back and forth along a kilometer-long drift, 24 hours a day. Those 2 trucks meant we did not need 26 workers making north of $100,000 a year each. The trucks don't stop. They operate by themselves. The maintenance costs are 30% less because they run at the optimal rate. They cannot hit the wall. One of the trucks has a scrape on the side. So we asked the mine manager, how did it get the scrape? And he said, well, when it was being delivered, they drove it down there and the guy drove it into the wall and got a scrape on the side. Never hit the wall since. So what we're taking those learnings, those innovation learnings, and now we're rolling them out through our company. We have fans in Alaska at Greens Creek, fans that will turn on and off when you leave the stope. It's like air conditioning your house, 1 room at a time as you walk through it. We're going to save about $1 million a year in energy costs. So you need to be smart about mining because it's a very hard business, it's very dangerous, and innovation can lead to obvious economic and safety benefits.
All right, now I get to give you a question that I get all the time. Are you ready? Okay. What is your view of the gold-silver ratio? Is it meaningful, unmeaningful?
You know, it's interesting. We did a study and we looked back over 20 years, and 4 times over the 20 years, the ratio was in the mid-80s. And every time there was a massive correction. Happened very, very quickly and was very substantial. But what I found was interesting about that correction is that it's not that gold doesn't go up. Gold goes up, but silver goes up 2 to 3 times as much. So we're a big producer of gold, we're a big producer of silver. We want to see both of them go up. We also produce a lot of lead and zinc. But they move together, but silver tends to boomerang faster.
So now the one I get all the time, where's it heading?
Well, it can't stay up here forever. It literally, when you look at the chart, you can see that it just sits in the mid-80s for a while and comes swinging back. So I think it's the parity over 20 years is 64 or so. I'm not saying it's going to 64 tomorrow, but I think if you see global growth and you see it trading more with copper, and if you can see inflation, it'll trade more with gold, and the combination is you could see it swing quite strongly.
Great. And just a tip for those that aren't subscribers, I look at the 72 level as kind of the breakthrough. So if you see silver get the gold silver ratio get to 72 and lower, it's probably going to do the acceleration that Mike outlined. All right, Dr. McGaw, please comment on Mexico's mining future, because as you know, a very important person is now an administration that is a leader of an important mining union and seems favorable to the mining industry.
Yeah, and good to see you again, David. Great to be back at the annual gathering of the Silver Tribe. It's also nice to be included with the producers after being an explorer for a long time, and we're still a couple of years out from being production, but I'm happy to test those waters a little early. The situation in Mexico with the new government has been way overplayed in the international press. The guy who's coming in, Andrés Manuel López Obrador, AMLO is what everybody calls him, was painted as a radical, the Hugo Chavez of Mexico by his opponents. That's not who he is. That's not how he's behaving. He has brought in the previously exiled president of one of the larger Mexican mining unions, who definitely has a hate-on for Grupo Mexico at very least. And it'll be interesting to see how that unfolds. But I think basically what he's looking for is a fair deal for the miners, and this plays into what Mike was saying about costs, and that labor costs go up every year. Mexican mining is pretty labor intensive. In our particular situation, in partnership with Fresnillo PLC at Juanicipio, we're looking at a lot of innovation. We're taking trucks out of haulage from the mine to the mill, for example. We will be using a conveyor that will go from an underground crusher straight to the mill. We're looking at a lot of things like that, the autonomous trucks and things along that nature, to improve the efficiency. And the fewer miners that you have to work with, the easier it is to work with the miners union.
Okay. So I want to remind everybody, grade is king, and no one probably instilled that into my head more than Peter. And all of these gentlemen have been very generous to me with their time. I've certainly never claimed to be a know-it-all, but I would love to be a learn-it-all. So I'm always learning about the industry from people that I would consider my betters or have more detail in areas that I don't. Obviously, I'm not a geologist. So going back to grade is king. Back to you, Peter. While we all want the price to go up, many investors are worried what happens if it doesn't go up, let's say over the next year. If that's the case, it's not pleasant, but the lowest price outfits can tolerate that for long term because of the important consideration of grade being king. So can you elaborate on that?
Well, when we put Mag Silver together back in 2002, 2003, the basic idea was to find something that was high enough grade to make money under any market conditions and large enough to last at least 2 full market cycles. And we've been, just because you set that as your goal doesn't necessarily mean you're going to achieve it, but we're very fortunate that we have 150 million ounces in indicated resources at a grade of 550 grams of silver, and another 100 million ounces in inferred at 650 grams silver. So we have the highest grade developing resource on the planet, and we're quite comfortable that we will be able to survive the vicissitudes of the market. I mean, we don't want to see silver go down, but as you mentioned, our all-in cost, sustaining cost per ounce of silver is $5. At $8 silver, we still have a 15% after-tax IRR. So that's what you shoot for. Obviously, we all hope the price goes up, but we can survive if it doesn't.
Okay. Thank you. First Majestic, Keith. We've seen a major merger the last few weeks between Barrick and Randgold. The silver space is much smaller. Do you think it's possible to see a similar transaction in the silver space? Why or why not?
Well, welcome everyone. Thanks for coming today to the conference. Good seeing you again, David. First Majestic's have been built on acquisitions. The company is 17 years in its life now, and all the assets have been purchased through either taking out other public companies or through acquisition from Mexican families or so on. So I think we've proven to be probably one of the most aggressive management teams there are in the mining space. But the silver space is very, very small, and it's very difficult to remain pure. As many of you know, purity to me, or the percentage of revenue from the sale of silver, to me is very important. And the San Dimas acquisition, which was our largest acquisition ever in the company's history, we added another 13 million ounces of production. We basically doubled the size of the company, but it had a lot of gold in it. But at the same time, that mine today is spinning off 40 million or 30 million per quarter, about 120 million per year in free cash flow at current metal prices. So how do you turn an acquisition like that down? But there's not very many of those mines around, and us being very focused on Mexico also limits some of our choices.
Okay, so I have a few questions in my head, but I'm also going to open up to the panel. I don't know if we have a mic out there or not, so you're going to have to grab my attention and, just speak loudly so I can hear you. Is there anyone that has anything right now? Okay, for the panel, we hear constantly, and I'm favorable to this idea that we've hit peak gold. I mean, you look at many of the majors, and they're looking at 4 grams. I mean, even 1 gram a ton for gold. Yet in my book, and I won't tell you what I think, I want to know what the industry thinks. What do you think about peak silver? I'd like to hear from all of you. I'll start with Peter. Go ahead.
Well, I think you have to remember that 80% of silver is byproduct. So a lot of the world's silver supply comes whether we care or not. And so it's that 20 to 25% that's made up by the primary silver producers, who are the ones who get the benefit of the swings, or the lack of benefits when the swings go the other way. Because silver has been unloved for so long, there's a lot of silver still in the ground if you're willing to look for it and look under cover and look in places people haven't looked before. We've demonstrated with MAG that there's actually really large silver deposits out there waiting relatively close to the surface and totally unloved and undiscovered. So there are more.
Let me jump in.
Sure.
How many people in the room drive an electric car?
Got 1 here, 2,
Yeah.
2 or 3.
How many people in the room have solar panels on their roofs? A little bit more. Those two technologies, they've been around for some time, but it's just in the last few years that these technologies are starting to really catch on. And, we know VW just announced a few weeks ago that by 2030, they're not going to even produce a single fuel combustion car. An electric car consumes 3 times more silver than a fuel combustion car. Solar panels are a huge driver of silver. Last year, there's about 90 million ounces consumed by solar panels in 2017. That likely is going to be much higher in 2018. I just flew over Tokyo a few months ago, and I was shocked to see how many solar panels there were surrounding that city and that airport. So, the miners globally produced 800 million ounces of silver in 2017, and the world consumed 1 billion ounces. You mentioned the ratio of 85 to 1. We're mining 9 to 1. So for every 1 ounce of gold worldwide, the mining companies are mining. We're only mining 9 ounces of silver. So that shows you how tight the silver market is.
Just if I can just add on, I think from my perspective, I look at what's coming, and I'm not talking about your project specifically, but the industry as a whole. I think the junior market has been underfunded. There's a lot of money's gone into marijuana, and a lot of money's gone into cryptocurrencies, et cetera. So the typical model is the junior companies get money to drill. It's high-risk drilling. They may get a real score, and then the mid-tiers and larger companies will come in and acquire those projects. The challenge right now, and it's not just a challenge with silver, although silver is, I would say, a fairly unloved metal, it's similar in the other industries as well. You think about it, you need lead mines to come on, zinc mines to come on, gold mines to come on, so silver will be produced as a byproduct. There's not a lot of all of those mines coming, and not a lot of juniors in every one of those spaces. You look at little zinc juniors, they're not getting any money. So the reality is if the juniors aren't getting money, they're not drilling, and then the mid-tier companies and the major companies don't have anything to acquire. So they have to then consider, how do we replace 1 million ounces a year, however many ounces, 100 million, how many ounces do they produce? They have to replace it every year. With what? So where are the mines coming from? You don't hear a lot about people opening new mines. It doesn't happen very often. So I think as a sector, I think that there is shortages coming in the metal. And nobody thinks about it in terms of what that may do to the price, but shortages are coming, and I think it's coming in a lot of metals. Yeah. And that's going to influence silver, because a lot of those mines, they kick out silver as well.
Would you like to comment?
Well, yeah, I'll just add. I mean, yeah, I think that to your point, we focus on costs. We focus on that development cycle. We have a large silver resource base, whether it's in Mexico. We've got large resources at a number of our other of our operations. I think that positions us well. But I think just as a from a peak standpoint, our focus tends to less be on that revenue line around what the price might be, but more so what you've talked a little bit about, Mike, and that is just innovations where you can get better so that you can sustain the longevity of that call option, really, and provide exposure to the underlying for the shareholders.
All right, just across the board, silver forecast over the next 5 years. It could be very vague as higher or lower, but I would like a forecast from every one of you. That way it takes the heat off of me, so.
Well, I'm a
the
triple
industry
digit.
said, and I can write that.
I'm a triple digit silver guy. Everyone knows it. I've been wrong for the last 5 years. When I put First Majestic together, silver was $5. I predicted $50 silver. It happened. It took 10 years to happen, mind you, but I wouldn't have predicted that it would have gone from 50 all the way down to current prices. But I think we'll be back up there. Just give us some time.
Well, I think I'll say I'm a triple-digit guy, too. It's just a question of where you put the decimal point. But I think silver will do what all commodities do. It'll go up, it'll go down. That's why we looked for things that were high enough grade that they can survive any market conditions, make lots of money when the price is high, and you get to sleep at night when the price is low.
And I think from the perspective of a company that has very long mine lives, you never know when it's going to spike, but it is going to spike. It's a cycle. It's always a cycle. Every cycle happens. Over the next 5 years, I think silver and gold will be substantially higher. And having a long mine life means that you can capture those, because you make all the money at the top of the market. Those couple of years, you make all the money. You just survive, as we're talking about. You survive at the lower prices, but you make all the money at the top. So you want to have nice long mine lives to capture that. I think in the next 5 years, you're going to see something happen to the US dollar. I think it may be from political issues, maybe from some other issues. The US dollar does not just keep getting stronger while they borrow $1 trillion a year. So at some point it reverses, the metals spike, in my opinion, and we're all going to make a lot of money.
Yeah, I mean, there's definitely a lot of undercurrents right around the strength of the dollar, the economy. We're longer term bullish, but again, we tend to focus more on the cost line and trying to explore and expand those resources where we can to take advantage of that over time.
Okay. So we have about 5 minutes, so we're going to give you the option because it's really your panel and not about me. So if you all would like to take like 2 minutes and talk about anything you want about your company, stocks, economy, or you can, if you all agree, which is hard to get a quorum of 4, I'll give you one funny story, but it does revolve around Hecla Mining, but it sets the stage for the industry as a whole. So,
well, I think 3 of us can agree that it's a funny story.
Talking about Hecla, yeah, we want to hear that.
I'm a big fan of funny stories.
all right, so I'll take the nod. Keith's kind of glared. I was okay. All right, so 1979, Hecla Mines was the absolute #1 best performer on the New York Stock Exchange. Nothing did what Hecla Mines did. It went from $5 to $50, and everybody and his mother-in-law's cat had to own Hecla. I put Hecla Mines on the Morgan Report, and I forget what year, but in the early 2000s at 50 cents. I was doing a show in Calgary, and it was $5. So it had done the 10-bagger already. And yet nobody cared about it. Okay, so my point is this. I think we're at that inflection point again. It's, as Mike said and all of you alluded to, it's a very unloved, misunderstood essential metal that is by the USGS stating it will be the first metal that they will, in theory, run out of. We never will. Price will be the arbiter of it. And I think more that there is peak gold. I do not think there's peak silver. But regardless of what I think, silver is essential to a technological advanced society. We all have more gizmos and gadgets all the time. Innovations are coming throughout the sector. And really, you know, you could live a very, very meaningful life without gold, but you could not have much of a living standard without silver. So I just give the story about Hecla. It isn't tongue-in-cheek. It just shows you that this is a very misunderstood metal, and that's when you want to buy. You want to buy when no one else cares about it. So if you
and I think to interrupt there, I think that's the importance of the active investor that's in the room here, right? We have a lot of passive influence across whatever commodity you might relate to. In particular here, and given the volatility that we mentioned that can be in the metal price, it sits to the importance of the active investor that's here, that's taking the time to understand that and get in early and drive that base that I don't think that you always have in some of the other commodities, or the ability to influence it as much as you have the ability to influence it here. I think that's a key distinction for the metals.
Sure. I'll just finish off. I'm done with my little speech, so if you guys have...
Well, I'll jump in. You talked about leverage when you introduced the company, First Majestic, and many of you probably remember back in January of 2016 when our share price was around $4. Silver had hit about $13.50 that month. By August of 2016, silver had hit almost $21. So there was a $7 move in the silver price. Our stock went up to $26. So it's exactly a 3-to-1 move. For every dollar in silver, our share price goes up $3. Which is pretty astounding. Another interesting fact is that our short position at the low at around $4 in January of 2016 was around 14 million shares. By August of that year, it hit 4 million shares. So a lot of that rally was caused by short covering. Today's short position is 30 million shares, largest short position ever in the history of the company, and we're twice the size of a business as we were back in 2016.
All right, we have a couple more minutes. We got a question, yes, sir.
That's a Hecla. If you make all your money at the peak, do you stockpile silver at the bottom?
No, unfortunately,
I'm sorry, let me interrupt so everyone hears it. So if you make your money at the peak, do you stockpile silver at the bottom?
with our mines, they're typically very high grade, and so we don't stockpile, concentrate. You know, we don't have a land position where we can make those big piles. We're running a business, and the last thing you want to do is get rid of all your people and lose all that skill and then bring them back when times change, because you can't get them back. So during the last downturn, 2014 and 15, going into 2016, rather than lay off a bunch of guys and sell all our assets like everyone told us to, what we did instead was we just curtailed some of the activities, but we kept all the people because they have the expertise. So you can curtail exploration, you can cut back a bit on your G&A and some of your external offices. And you can look at your production a little bit, but with our mines, we don't high grade or low grade. We literally just keep mining them efficiently all the time. You want those trucks to run 24 hours a day. You don't want to keep stopping things. You want to keep the people. The people are the most important thing because they're the ones that can mine it safely. They're the ones that can mine it efficiently. They're the ones that you need to maintain. So we're running a business.
Being more specific, instead of keeping a cash account on your balance sheet,
Yep.
keep a silver account.
The reality of what we do is when we earn a dollar, we think, where do we spend the dollar? And in these innovations I'm talking about, we're talking about getting 1-year paybacks. So with a 20, 30-year mine life, you get a 1-year payback. It has enormous returns for us. That to us is the most significant use of cash we can find. So we want to keep generating the cash. We still generate cash at low prices, but we use that cash to get massive returns in some of these innovation projects.